Yeah, I think 1 month of trading cycle has been completed, and we have fell short of achieving our target. We did actually reach $900, and which is like roughly around 7% of our overall target. We were just wanting to achieve 3%, but we were not able to achieve it. So we get another opportunity to retry, and before that, like, the actual cycle starts from Monday. So before that, I wanna do a retrospective of my trades that I've took, what are things that I could have done better, and what I did went wrong and everything. So I'm just gonna go to my orders history. I'm gonna see like one by one from the beginning of the trades that I took. I'm gonna see like what went wrong and everything. So about that. So this is a silver trade. I think it was an initial trade that I went ahead, and I wanna take. I didn't want to take a much risk, so I risked only not even a 0.3% of my overall capital. So I risked it, and it was a failure, and then I exited it, and then I moved on to sideline. If you see, on the 18th January, I just took this trade, and on after that, I did not take any trade like for the rest of the week, and I came back, and then on 23rd January, I took another trade. That was a failure as well. That was an SPX 500. So what I would tell myself is to stay away from the metals, to stay away from the future market, focus only on the forex market for this challenge to be completed. So because the nitty and gritty of the forex market, I'm able to understand it, like how things move and how I can utilize that. So this did actually go in our favor. Like, even if I had taken this trade, right, I think that was a good trade. Let's go all over here. Let me go to USD CAD. Sorry about that. USD CAD. Let me go to the daily. No, actually 4 hours should be fine. Yeah, I wanted to sell short here. I did go short at this location, and if you see, let me go to the 1 hour. Can we will go back to that date? Can we not? Or is it some periods? Let me go to the browser. 4 hour. When this did happen, it's happened on. Okay, let's try to. My bad. Reset the zoom. I'm sorry, guys. This is something new for me, so I'm just trying it out. Yeah, we got it. Yeah. So I took a entry around open price 1.3405. So I think this is the one. So this is where I entered short, and if you see, the price did go after. So this is where I entered short. I took a short. I closed the trade here because it hit my stop loss, and then it moved down. And if you see, if I had a proper trade management, if I had entered this in a proper way, it did go in our favor. Like, if you see, if I had hold it for like on second, on 7th I entered this trade, and on 13th it has moved enormously in our favor. So that was a good trade, which I could have properly handled it, but I didn't handle it properly. So yep. And yeah, I'm just gonna ignore this metal trades because that's a stupid trade that I've taken. And USDJPY, let's see USDJPY. 1 hour, 4 hour, 4 hours. So this is one of the trade I took. I sell short at this point. That was a great move because I think this is a reverse trade, in the sense like we were targeting to fill these gaps, and then we did rally up from there. And I used these are the trades that I took based on the setup that I have, like the MA 20, 10 and 20, and I did bought here, then sold here. So only one thing I noticed is, if I bought here, and if I had left few of the things, right, like if I had, so I entered with if you see, I'm entering with 0.1 lot. That is not a good size. That's definitely not good size. It's definitely not a good size. And this is where I've started taking profits. If you see, I take it. Then here again, so if I had kept few of my openings, right, so it would have moved enormously. So don't close out your entire position if you had entered at a good level, right? So don't close your entire position. Yes, price could come back. So if you have your stop loss here, so if this price come back, let it come and take. Be okay with your price coming and taking your stop loss, but rather you should have held your position, look to add for more, and then take partial profit. Because if you had caught this move, right, that would have been a great chance for you to make some profits. But instead I closed up here because I was so scared that what could price do. Let the price do and come take your shot, I mean your stop loss. That's fine. You have your partial taking game. You have to upskill your partial taking profit, I mean partial profits taking skill. That is very much important. And here one thing I've noticed is, if I had let that whatever amount of I've kept it, or so let's say bought something here and then I take partial profits. Imagine, like, see, I went entered with 0.07 and entered with 0.1, so that was my lot size, and for that I'm taking partial profits, and that itself has given me an enormous amount of $140 as profit. 58, like, those are like two, almost like $200 profits from one single trade with 0.1 lot. So I entered with small amount of risk. My lot size was improper, and this one is a stupid play. I was so aggressive. I entered early on this, but this was a good trade. I wanted to take out this liquidity. It did take out, but I did not hold that trade. But that's okay. That is okay. That is fine. So one thing I've noticed from this is leave a little bit of portions for the daily range to expand, because on the daily time frame, as ICT said, daily trends will not be changing quickly. It will take some time. Their trend is not like the hourly or the 4 hours trend. Daily, weekly, monthly are the institutional sponsorship flows that you have to listen to. If I'm targeting something weekly, and if I'm entering at a month of beginning, right, so what is the expectation for me on the monthly to do? Like, what is the monthly candle is expected to do for me? Is it on the uptrend? So obviously the price will listen to whatever the monthly chart has been doing. Like, if the monthly is being on a downtrend, obviously I have to expect for the downward price. If the monthly is on an upward trend, then obviously the price is going to do what? Go up. So you have to start from monthly. What the monthly is expected to do? Is it going to go up or is it going to go down? And then based on that, decide on the weekly entries, and then go to the daily, and then the 1 hour you pick your trades, and then you enter, you take partial profits, you re-enter, you take partial profits. But don't fucking close your trade entirely because of some irrelevant newses or some newses that are coming up. So that's one thing I've noticed from here. Same Aussie trade. Beautiful trades that I've taken. Look at, I milked the entire month. Like, I was trading literally Aussie the entire month. The entire month I was literally trading with these two guys, Aussie and this. See? Fucking beautifully trades. Fucking. See, like, if you notice, 0.06, 0.01, what is that? What is the position size? I don't understand. 0.1 is the lowest. Like, at least I have to have 0.3. And I have to weather the pain that it can give me. That's okay. 0.3 is like 30 pips. If 30 pip move is against me, then I'm getting stopped. That's fine. 30 pips against you is the decent amount of stop loss that you can take it up, right? If you have planned up very well and if you're entering at a good price, then 30 pips move against you is fine. You have to weather that, sit through that, take it up, observe it. And again, this was a good trade. Actually, this was again a good trade. I bought, stop loss it, boom, it went. I bought, stop loss it, again, boom. You have to sit through, because the institutional paradigm is on the daily for the price to move up higher, and me buying, opening here, leave the stop here, let it come and take, but you would have already taken your partials. If the price comes and takes, that's fine, that's absolutely fine. You will have an opportunity to re-enter again. You entered it again, you closed it. Why did you close it? Look at that. Look at that movement. Because in the daily, you are expecting the price to go up higher. And look at the amount of pip that it moved. So stop closing your positions so early. Even if it is 0.01, you should not be closing your positions entirely. There should be trades up and running. And you take profits out of it. You milk it. Like you take out of the profits and you try to re-enter if you are getting a good entry. Good entry. If you're getting a good entry, enter with minimal risk. Not 1% of risk I should be carrying over. Like even if I'm having a 10 trades, if those 10 trades turn up against me, the overall risk my account should take up is 1%. That's all. I am keeping my trade. And if all those 10 trades takes me up and takes out the 1% risk that I have on my account, then even the 10 trades that I take up the next time should not be crossing more than 0.5%. I am cutting my leverage on the losses. I am. You should keep in mind that even if I have 10 trades with 1%, which means 10 trades per trade, the risk is 0.1%, right? 0.1% of 15 is $15. $15. Take 10 trades, $15 of risk. You're looking for 3 hours, 75, or 45, or whatever it is. Like even if you make 50, and if all of the trades are being in your favor, and if your 10 trades is risk 1%, and you are making like around 3 hours of the trades that you entered, which means $50 profit you're making per trade, which means 10 trade $500. That means 5-hour trade. Bingo. And you cannot expect all the trades to give the same amount of, some could give you $70, some could give you $30. So roughly what you're making. But what is the overall risk that your account is being weathered down? Is 1%, not more than that, right? And partial profits you should not be taking up so early. So I think one of the things that Larry Williams told is, I think I'm going to go and quote it here. I'm just going to open, I'm not sure which exact book is that. I think it's this. Let me come back to that. For one thing, we usually act too quickly when we are trying to make money and too slowly when we are trying to protect our money. When you are pressed to make a decision, ask yourself, am I doing this to protect my money or to make more money? If the answer is to protect my money, act more quickly. If the answer revolves around making more money, act slowly. Which means if you're taking profits, which means profit taking is not a way of protecting your money, it's a way of making money. You're making money by taking profits, right? So you should ask yourself to act slowly. Don't be in a hurry, don't rush it. Because making money, you should act slowly. If you're protecting money, act fast. Protecting money is like, if you're 100% sure, if you're 10% sure that the trade is going to go against you, then act faster. Protect that money. Okay, fine. Like S&P 500 trade that I took based on SZ and Wi-Fi Alpha, like they were all screaming for low prices, and I was not confident. I don't know why. I couldn't weather down the fluctuations of price that it was making. But look at that, it panned out very well. But I closed it for $50 loss. That's okay, because I was not confident what I was doing. So I did not want to hold it, and I exited it. That's fine. But the Forex, I'm having an understanding like what is the price going to do. And S&P 500, I'm trying to avoid from futures. I'm trying to avoid from metals. Don't even think about what is those metals or the S&P 500 is doing. All you got to do is check for the dollar. What is dollars doing? And the respective foreign currencies will do the exact opposite. Like for the pairs that is mentioned in the pair of Euro, JPY, they want to do what dollar is doing, right? So spend more time on understanding what dollar is doing. Because for you, Forex, dollar is important. Dollar is everything. So the lessons are, if you are going to make money, act slowly, which means take partial slowly. Let the price go up. Let the price go up. If you want to protect your money from losing, Act fast. Act fast. Again, this was again USD Swiss. It's a good trade, but I could not handle it. Again, Aussie trades. Aussie. Absolutely melted. Look at that trades, man. Look at the trade. Like in a month, I was literally playing every week Aussie. Every week I was playing Aussie. Stops got taken out. Impulsive move. Price retested it. Bingo. That's a great trade. This is your key level. It is being retested. Support lost. That's a simple pattern. Yeah, price would come here. It's absolutely price would come here. That's why you need to have a stop here. Or you need to enter, stop here, and you need to re-enter if the price comes here. So you are averaging it out. But the price is not able to come there. That tells the price is not able to fill these as inefficiencies at the top because there's a breaker block. Because your liquidity has been taken, it's want to go lower. The price will not be coming up. If the price is coming up to this point, then the price is not weak. That tells you that. Again, similarly here, price takes out the liquidity, comes down, break a block, could not even come. That signifies you that price is weak and it's want to go lower. Absolutely, it's want to go lower. And I'm going to start journaling here itself in this. Note down everything. Note down everything. Whatever I do, I noted down everything. I think in this I did not mark out the comments, but here if you see, playing out the ranges is a mark. Still we have more ranges on the lower side to be taken out. Absolutely yes, but why did I close the trade sooner? If you go to this trade, right, which one is this? We go to 1 hour. See, that's an absolutely beautiful trades, man. Beautiful trades. Look at that. Look at that. Look at that. Amazing. But I closed it like an idiot. I closed 0.1 here. I closed 0.2. So why did I read so quickly? I don't understand. I don't understand. I don't understand. And this is something I do not want to see again ever, because if you see these trades that I took are in a hurry. Like I was in a hurry to make money so faster because I risked more. Like I was 2.5%. I was risking 2.5% of my account. If you see the equity curve, I was literally sitting at 6.5%, risk 2.5%, boom, 0.389. Literally splashed it. I want to make 3% more. Instead, I lost 3%. This is something you should avoid. Look at the drawdowns. I kept entire 18, maximum 0.5, 0.3, 0.3. Did not cross a 1%. Did not even cross 1%. And all of a sudden, see, I did not stick to my discipline, and I literally messed up. Literally messed up my goals. I lost 2.44%. That is something I need to avoid. That is something I need to avoid. I cannot be trading like that, like risking 2.5% of my overall capital. Imagine if you did not risk 2.5%, you risk to overall 1%, and it's still 5.8. You would have retried again the rest next week. So one thing is, it's not like on the day trading you have to trade only Fridays. You can trade on Monday to Friday. You can trade swing trades. You will get only opportunities a ample amount of time. So it's okay to trade Monday. It's okay to trade and on Friday if you are getting a good amount of trades. I mean, if the trade that you're trying to enter is like high quality trade, I can actually go and take it up, and there's no issue with that. That's okay. I think I've covered everything that I want to cover. Take partials slowly. I have a defined places where you want to take standard deviations, list of amount where you want to take out those profits. Gotta be Sharp ratio 0.28. I want higher Sharp ratios. Higher Sharp ratios is equal to more returns, less risk. More return, less risk. Average trade 22, that's fine. Yeah, I'm a swing trader. I trade for 22 hours per trade. Average wins, average loss. It's okay. Out of 15 long strike, I want 9. Out of 18 shorts, I want 9. Doesn't mean that I'm weak in shorts. It's I'm not entering with the correct way of doing the shorts. Worst trade minus 85, best trade 140. My best trade is 140. That's I can't tell. It should be something more than that because I'm aiming for my risk. Is, it totally depends on this. Let's see. I'm gonna stop it here. Let's see how the new month for us goes up.